to Navigation Trading Live. You are now part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now, we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So, let's get started. Good morning, Navigation Traders. Happy Monday. Today's Monday, March 26th. Hope everybody had a great weekend. I know I did. And ready for another awesome week of trading. If you haven't already, make sure you connect with us on Facebook, YouTube, Twitter. This is where we make our announcements for all upcoming events and what we've got coming out for you, new tools and courses and all that good stuff. So if you haven't already, make sure you connect with us there. And as always, you guys have been awesome about submitting suggestions and topics and things for us to cover. So keep up the good work. You can make those comments here on YouTube or Facebook, or send us an email at info@navigationtrading.com. So I don't really have any specific announcements to talk about. So what I wanted to do is go to the platform right away and take a look at what's going on in the market. So the bell has not rung yet. We still got a couple minutes till the market opens, but I've got a chart here of the S&P 500 futures. And what you'll see here is that obviously on Thursday and Friday we had that huge push down 2 days in a row, and now we're getting a big pop up here today, this morning, where the S&Ps are up about 30 points, 31 points. And so what I'm anticipating, and again, take this for what it's worth, because nobody knows what's going to happen. Nobody on CNBC, no economist, no floor traders, nobody knows what's going to happen. But what I'm anticipating is that this is a little bit of a bounce and that it's going to roll over and continue lower, okay? So you know that if you've been with us trading for any amount of time, you know that we like to keep a short bias in our portfolio. Well, what's happened with this move down recently is it's kind of taken away all of our short deltas. And what that means is, you know, we had short bias positions that we either took off because we took them off for a profit, or we had a strangler, an iron condor, where price was kind of hanging out in the upper range and it moved lower, so it kind of sucked up some of those short delta, making us more delta neutral. So our overall portfolio is very neutral right now, which I don't mind after a big move. I mean, it automatically kind of gets you in that position, which is great. But with today's pop higher in price in the overall broad market, I want to be looking to add some additional short positions into our portfolio. So that's what we'll be doing this week. We might add one or two today, and then if price climbs a little bit higher, we may add another one, and just continually monitoring and managing that on a portfolio basis. So we've got a couple of videos out there on our blog. One is how to trade options like a professional, and the other is how to hedge your portfolio using delta, or how to delta hedge your portfolio. I can't remember exactly what we called it. But take a look at both of those, and that'll help you understand how we manage our trades from a portfolio standpoint. Now we enter trades individually looking at the specific criteria like high implied volatility and all the different criteria that we use to enter trades. And then we also adjust and exit those individually. But we always need to have the perspective of what's going on in the rest of our portfolio. And that's what I'm talking about here. And that's what I'm saying. You want to have that bias. Either you want to have a short bias, which we typically like to have a short bias. You want to have a long bias, so you're you overall that you benefit from when the market's going up, or you want to have an overall, somewhat neutral bias. The reason that we have a short bias is because the core strategies that we use is where we're selling high implied volatility, we're selling premium, and we want price to stay in a range, right? So when you trade that type of method, then what can really hurt you? Well, huge moves in one direction, right? Now, in 2017, we had a huge move in one direction, but it was to the upside. And we didn't have one down month in the entire year of 2017, which is really unheard of. So, it's a very difficult one-directional move. And when the market's moving up, a lot of times implied volatility is also going down. So it's hard to add new positions. And so a market like that, that's the most difficult time to trade our methodology. Now, obviously, this year we've done really, really well because we've got this two-sided action. We've had these big moves down, which is increased implied volatility exponentially. And it's been just great trading overall. So what my point is that you need to kind of have an overall bias in your directional approach and look at your portfolio, SPY weight your betas, SPY weight your deltas, beta weight your deltas to SPY or some other broad market index, and make sure that you're managing your portfolio accordingly. We're very delta neutral right now, and this up move today is great, what appears to be a good opportunity to get on some more short delta, and so that's what we'll be looking to do. So I hope that was helpful. I'm just trying to give you guys each week, give you guys tidbits and on kind of our thought process of how we manage things, and so that's what we'll be looking at. Now let's take a look at the market and see what else is going on. I already mentioned stocks, obviously all up over 1% in every index. Oil down slightly, gold pretty flat. Notes and bonds pretty flat. Nat gas up a little bit. Looks like soybeans up, but wheat is down. Corn's down a little bit, and the euro is up about 0.5%. Some of these other ETFs going up from the bottom here. Utilities up. All these are going to be up. You can see XLK, which is technology, tracks pretty close to the NASDAQ, up over 2%. Biotech up. These energy-related ETFs up nicely. FXI, the Chinese large cap, up almost 3%. That'll actually help our position nicely. Let's see, XOP up. IYR real estate up. XRT retail up. EWW is up. Kind of going down the line. See if there's anything else that pops out here. And then if we look at some of the individual stocks that we track, Apple's up big. All the stocks are just up big. Alibaba's up over 4% this morning. See what other big movers there are. Intel's up over 3%. JP Morgan, looks like the financials are all up big. Google up over 3%. Microsoft up over 5%. Wow, that's a big move. See if there's any other big movers. Shopify up over 4%. And yeah, everything's up. Everything is green. My screen is green except for Facebook. Oh boy, Facebook could be in trouble here. Anyway, so that is what's going on in the market. So what I want to do now is I want to take a look and add a position for our trade of the week. So what we're going to be doing today is we had a position on in GLD and gold, and then implied volatility collapsed, and we got out of the trade for a nice profit, and so implied volatility was really low, so we didn't want to add another position. But now implied volatility at the end of last week spiked up, making the options more expensive, and so now I want to look at adding another GLD position. Okay, so we've got positions in stock indexes and in the euro and in nat gas and the grains and different things, but we don't have anything in gold now after we took that one off. So I like having that exposure. It becomes a very low correlated asset to some of our others, and so that's what I'd like to do. I'd like to put on another position in GLD. So if we open up the option chains, you can see April's just got 25 days left to expiration. So we're going to go out to May, which has 53, which is right in our wheelhouse, wanting to enter with 30 to 60 days to expiration. And we'll look to do an iron condor. If you're doing uncovered or naked positions in GLD, it tends to use up quite a bit of capital. So I like to define my risk when I enter these trades. So look for around the 20 delta. In this case, we'll use the 21. We'll right click on the calls and sell iron condor. I like to typically go about 3 or 4 points wide here. I'm going to go 3. We'll take a look at that, make sure the risk reward sets up nicely. And then over here on the put side, we've got a 19 or 25. I typically like to default higher, but let's just look at the 19 since it's much closer to the 20 delta. So that'd be the 124 strike. So let's choose the 124 on the put side, go 3 strikes lower, which would be 121. And then let's go analyze this puppy. All right, so here's what we're looking at here. We've got a max profit of 68 bucks with a max risk of 232. I don't like that risk reward. We like to, our max profit, we like to be at least a third of what our buying power is used or what our max loss is. So in this case, I am gonna go ahead and move the puts closer. So let's move those up to 125, and then we'll move this one up to 122. Unlock this, see where that gets us. So now we're at about $83 to 217. Getting better. What if we, let's see if we moved in the calls a little bit as well. So let's move those down to 133 and 136. So this is giving us a lower probability of success, but it's getting our risk to reward a little bit better. So with high implied volatility the way it is, I don't mind going a little bit tighter like we have. So if I set our slices to break even, and we're still getting over 55% probability of success at expiration. So as we manage this for around 30-40% of max profit, that's we've got about a 75% chance of making money on this trade. So I like that trade. I'm gonna go ahead and mess around with getting it filled. I'll probably do several contracts on this one, but that's what we're looking at for our trade of the week. So I hope that was helpful. If you guys have any questions, let us know. Otherwise, our pro members will get an alert once I get filled with this trade and any other alerts that we have. So our pro membership is still closed to new members. So there is a waiting list. So if you go to the website, click on pro membership or pro membership trial, you can join the waiting list if you're interested. So everybody have a great week of trading. We'll talk to you next week.